Welcome back everybody into another daily recap. Today is Monday the 23rd of January and we're back into our daily recaps sessions. So as you can see, we are of course on gold on the hourly time frame. And what we can see is that even though it's not picture perfect, it's not a clear straight green line, we can see that we are in an overall bullish trend. Why? Because we can see and identify how price is still making higher high, higher low, fails to make a new higher high, but still makes a higher low, rejecting the key level 1902. Very multiple hours of bullish price action, making a new higher high above 1935, 1937. Then we see a strong rejection point, and then we are here at the start of the week in a sort of a little bit of consolidation. But where are we? Where are we staying for now? We are staying above 1923.5, which is actually is being a support of gold, of this bullish trend. So if we manage to make a new higher high, then price will continue. But we, of course, we need some fundamental catalyst for this to happen. And today there was no economic report or news expected. So my trade ideas were continuation buys with a pullback, deeper pullback at 1912, which was actually, yes, was a trend line, but was also a key level. You can see how many rejections happened just in the last week at this key level, and I was expecting for this pullback for continuation buys. I was expecting from here some sells below 1923.5 and any rejection. Look at the 1923.5, how big of a reaction point, PSA, price sensitivity area it is. Multiple times, especially for scalpers, that's a very huge level. It's been very full of liquidity in either side. You can see for bounces or rejections, and either side has been a very sensitive area. I was looking for, of course, buys above 1929.5, and as I said, rejection from here. So let's see what actually happened. So we ended, if we see, this is pre-London, but it's after my analysis, we see that the price is slowly making its way down, and it breaks below 1923.5, retest. As you can see, it's a very small retest, but still closes below, and that's where I could have entered. I was not entering now for like a 40 pips scalp, which is still a 1 to 2. This could have been even been a 15 pips stop loss. As you can see, this is our PSA, it's not even this one. For a quick scalp, this is almost a 3 to 1 scalp. You can see that's a very clear double bottom down here. Let me zoom in. Price is making a double bottom at 1919. As I said, this is London Open. If London Open fails to break, you see this is London Open. London Open 2-3 minutes fails to make a new low. Retest, fails to make a new low. If it fails to make a new low, then okay, I'm not at my PSA. If it was at my like 1917, which is a daily PSA for me, then it would have been perfect for buys, because I know that that's a strong PSA. But anyway, the most important part is to identify what is happening. So you don't have to fear any FOMO for missing this thing, unless you were expecting. I was not, as I showed you, I was not expecting buys above 23.5, because I was not expecting it to go this low already. I was looking for sells, but as you can see, that's where we can have a shift in bias. And yes, we have 3 minutes of impulsive movement. This is 45 pips impulsive movement, no reason whatsoever, unless you had like a buy stop above, then you would have got it, but that's not the point, that's not the analysis. So let's go and see what my actual analysis was. So this one was live, and this was an actual trade. So I saw this bullish movement. This is a new higher high on the 1 minute. I know it's not, but in the last 2.5 hours, that's a new higher high, and that's when now there is volume compared to before. So For me now, this is a whole new story. And what I was looking for, okay, let's see the pullback of this. I was not entering random, but I was looking at the pullback starting from this double bottom. That's where the liquidity was coming from. Let me see if I can. So this was an order block where the liquidity was grabbed to continue bullish. So you can see we also had a pretty nice retest of the order block before continuing bullish. So this for me is the start of the retracement tool, just to understand the percentage of retracement. It could have easily been, as you can see, it makes even sense as per price point of interest, price sensitivity areas that the price reacted here, which is also 50% retracement and is actually something on the chart. It's price point of interest. It's not just a number or a percentage. Even if you enter there, you would have got a nice 20 pips. As you can see, a nice 20 pips stop loss will still be valid. There you go. But where I actually entered was 61.8 because I was looking also at this very recent PSA, very recent higher high, higher low, but that's just a price sensitivity area where the price reacted lately. So when I saw this price action, that the price was clearly slowing down, was clearly creating a sort of curve, was not, I don't always need just a bounce. That's where I entered my buy. That's what my first trade, 0.05 lots. And that's where I stayed. I stayed overall like 40 minutes in this trade. And then I actually closed it at 10 pips for stupidity because I was looking at the operation, I was on mobile, and then I didn't want to, but I closed it and look at where it went. There was no reason for me to close it. They are still in a very bullish price action, as you can see. So I was not closing it because I felt any fear or whatever. It's just because I tapped my mobile phone on the wrong button, and that's where I closed for 10 pips. And that's where actually price went to my TP was 45 pips, was around was at the previous highs. And the other one I want to also shift, the stop loss was 15 pips, so it was a 3-to-1, very nice risk to reward. And I also have to understand that this is a scalping. I'm scalping, so even though the price went for 60, 70 pips, 67 pips, that's my piece of the cake. This is my piece of the cake because maybe it just reacts over here and then jumps back down. So yes, it can be in the future that I will take key level to key level, but for now, it's good to also take my scalp, take my money, get out of the trade, get out of the charts, and be happy about it because I did it. I did what I needed to do. But anyway, was a mistake, but for me, I'm very happy because I took my trade and absolutely happy about it. Then I was just looking at, this is my only trade of the day. So as you can see, I was looking at the chart, and of course in Insight, this is not bullish anymore, but of course in Insight everything is good. So what I was looking for as well, here even doesn't even make sense here. I don't know where I was looking at, maybe from here. Yeah, I don't even know. I was looking for a buy and I placed it, but it was, of course, it was a loss because of the rejection at this level. So this was a possible loss, but I didn't take it. So let's remember what my analysis was. My analysis was to 1929.5 buys above. I was not looking for sells at 29.29.5. I was looking at sells 1923.5. But let's see here. This one was actually seen live. So I placed on TradingView the sort of let me just change this. I placed this position here at this time, and I just didn't take the actual trade, because what is my my thought process? Of course, if I was trading and I was trading my analysis, then I should have, if I took this buy, then I should have taken this buy as well. So instead of looking for sells, yeah, I understand that 1929.5 is a strong rejection. Maybe this is exactly as a scalper. I will need to adapt. Maybe for my analysis, I will use 100% of my lot. For quick scalps, counter trend or whatever, I will maybe use 50% of my position size. But that's very important for me to review this price action. So I saw this overall bearish movement. Yes, price did not make a new lower low on the high time frame if we look at this on the 15-minute or 5-minute time frame, but that's not relevant. What for me, I felt like, okay, let's see, this is a nice bounce. This was a 65%, 75% retracement of the overall price action. I guess that if I go on the 15-minute time frame, that's the high point, as you can see, to another low point, and that's exactly 75%. I think I also did like this. Yeah, that's a 71.8% exactly on the dot, but that's not the point of this part. So that's where I saw it. I said, okay, price is reacting multiple times at 75% retracement. For me, this could be a sell. That's a 15 pips stop loss, and that's again, as a scalper, if I here I just wanted to take this piece of the cake, then here the actual trade would be 30 pips. This could also be lower, could be also almost at 10 pips. I know it's very risky, but that's still almost a 3-to-1, and with confidence you can even take a higher higher pip size. But this is what actually happened, and that's where I actually felt very good, because it was confidence building. I now want to see how I could have taken, what would have been my thought process of this, especially on the 15-minute. So we're talking about this bounce. Yeah, exactly. This is pre-New York time. We saw this bounce from 1919. We made a new high, but we are still under this shadow. So that's actually the 16.8 that I was talking about. This could just be, okay, trusting the key level. But anyway, what is my target? Next to the PPL, what is my target? A scalp here. As a scalper, what is my target? This will be 20 pips. What is my stop loss? This can be at 10 pips, 10 to 30 pips. Could still be. That's should be a very scalp, because I mean, we're not actually making sense for now. We're not making higher high and higher lows, so that doesn't really make sense. I think what I was looking for before was this 75, which was only up like 15 pips. Anyway, so this is a buy from 1923, when would have gone pretty nice, 36 pips, but anyway, I don't even have to think about catching every move. So let's have a look at something. Here, okay. Another thing that I saw was not seen live, was that this move. So of course, price is making, this is the last order block. Let me show you. This is the last order block where we took the sells, the estimated possible sells, and that's okay. You see a clear, is the opposite as here. Price is clearly breaking below. Look at the impulsive move. This is New York session and impulsive retracement. Where are we here? We can see it clearly where price is reacting. Over here, let me just change it into sells, for example. Okay, this is the start of the liquidity. This is where the liquidity was accumulated and grabbed to drive this scalp sell, these impulsive sells. Okay, where is price now reacting? It's reacting at a 61.8 and 50% retracement, and is closing below these previous lows. So this closing below this previous order block that was created at 1922.5, and that's actually my trade idea. This was my trade idea of selling below 23.5 if we see a rejection. So that's actually a nice idea, 20 pips, 60 pips. That's where the volume is in. We're talking about this is the new 4-hour candle opening, and that's what it really happens a lot, is that the new 4-hour candle open fails to make new highs, fails to create, it's just getting a pullback, grabbing liquidity, and then continuation. That's what actually happened a lot. Like here, this is London open, London fails to break, makes the retracement, and keeps going. So that's actually, that is something that has been backtested a lot by me, and it makes sense. It makes sense. New 4-hour. Also, we're going to see it for the New York Stock Exchange Open as well. So this would have been a nice scalp. Of course, this is a pre-planned trade idea that I was not trading, I was at work, but that's very good to look at it, and that's very interesting. After that, as we can see, I don't know what this dot is. Okay, anyway. 0. What is this 0? I don't know. Okay. Anyway, is the, okay, I got it. The Fibonacci one. Okay, so then, as you can see, where are we now after with this impulsive sell? We are exactly at 1912. If we have a look at on 15-minute time frame, that's exactly where we are. Of course, it's a little bit messy, but that's exactly where I was planning to. So as you can see, and we're going to see it more clear now, where price is going. So we see price is making new lows, but here, why I shouldn't be looking for a retracement and take sells? That's because, I mean, unless I take it from there, and then maybe it makes sense. It's a 61.8 retracement, but here at 1912 for me it's a big price buy point, as I told you, but that's where I wanted to buy at this level, so I was not looking for sells, and that's where I would have entered. As you can see here, very strong reaction. As you can see, it's New York Stock Exchange already opening, making the lower wick, and then bouncing up. This is like a 50, the target would have been here to revisit the previous highs, and that's a pretty nice, could have also been a 3-to-1 risk to reward, but as a scalper you don't always need it. Anyway, what you see with this is of course the 10 a.m. candle price. Yes, it's digging a little bit below, and we can also remove here so we can see the key level, how the key level is perfectly reacting to it. And another, this is also seen live because this is my pre-planned trade idea. I wanted to enter here, but I was scared. I was not. I was on the mobile and I didn't want to take another trade. But it's another double bottom at my trade idea level. So that's where you trust your analysis more than just the price action. So as you can see here, very aggressive 1 minute, 1 minute, key level, and that's where price goes. Yes, again, you can revisit, you go and revisit the previous highs, and that's a 60 pips now, more than 60 pips trade, 20 pips stop loss, and that's a nice more than 3-to-1 risk to reward ratio. And let me just do this. Okay. Again, what we see now, we see another retest of 1917. This is a retest of 1917. What is 1917? As I told you, it's a daily PSA. So that's a strong price point, and that's where you could enter. For example, if I could have continued after taking this scalp, maybe I said, okay, I want to take the continuation, and that's another 70 pips on the upside. Maybe I'll just take it to these previous highs on the left, and it's still 50 pips with a possible stop loss of like 15 pips. So that's very good, still very good risk to reward ratio. And again, that's something that I saw. That's crazy because I'm just seeing it now. That's something that I saw on the chart just before um, getting off to work from work, which I finished at 5:30. 5:30. That's where I finished, and that's where the price action I was looking for. I was looking for a price, especially here, because yes, I could say that is 61.8, but also makes sense because the previous price action, price sensitivity area, it's right here. So that's where the price is most likely to react. This one was here from before, and that's where also more than another 60 pips just to reach the previous highs. You don't need to grab the whole move, you just need to grab your piece of the cake, and that's exactly what happened. And that's something that is really building my confidence because of these two price actions. That's this is double bottom at my price sensitivity area. This one was seen live, this was taken live, and this one was not seen live, but this one was seen live. This is a 60 point win. So this one was the first trade, and my first trade. So that's basically it. I'm very happy about my getting back into the market. I have a much clear understanding of what I'm looking at in the market, and that's actually very good. Trying to look at it more objectively and have a very much clearer understanding of, okay, what do I need to enter, what do I want to enter, is this my pre-plan idea, this is a Fibonacci. I'm integrating everything that I learned so far into actual trading, and that's where I will go. So see you guys tomorrow.